You see the sweep happen. Price breaks below a swing low. Stops trigger, then price reverses sharply back up. You know what just happened. A liquidity sweep. But you froze. You didn't know where to enter. You didn't know where to put your stop. You didn't know what your target was. And by the time you figured it out, the move was already over. That is the gap this video closes. Not what a liquidity sweep is. You already know that. How to actually trade it. Entry, stop, target, step by step, every time. Not financial advice, just education. Let's get into it. Before we go into the trade setup, let me be clear about what we are trading and what we are not. We are trading the reversal after a sweep, not the sweep itself. Never the sweep itself. Traders who try to enter during the sweep, buying into a falling price because they think it is about to reverse, are guessing. The sweep is the setup. The confirmation after the sweep is the signal, and the entry comes only after confirmation. This distinction alone will save you from the majority of bad entries. Here is the one idea that changes everything. A liquidity sweep creates three things simultaneously. It creates a new low that will become your stop reference. It creates a volume event that tells you whether the sweep was mechanical or conviction driven. And it creates an imbalance, a fair value gap that price frequently returns to before continuing in the reversal direction. All three of these are essential inputs to the trade. Miss any one of them and you are trading incomplete information. Now let's build the complete trade setup step by step. Step 1. Identify the liquidity pool before it gets swept. You cannot trade a sweep reactively if you want to catch the full move. You need to identify where the next sweep is likely to happen before price gets there. This means marking every significant swing low on your chart where retail stop losses are sitting. Look for swing lows that are obvious, the kind that every trader on every platform can see. Round numbers just below a swing low that held multiple times, a swing low that aligns with a previous support level. These are the locations where stop losses cluster. Mark them. These are your potential sweep targets. When price is approaching one of these marked levels, you are now in setup mode. You are watching, not trading yet. Your job at this stage is to observe, not act. Step 2. Confirm the sweep with volume. Price breaks below your marked swing low. The sweep is happening. Now check the volume immediately. This is the most critical filter in the entire trade setup. A genuine sweep that will reverse has a specific volume signature. The break below the swing low happens on relatively low volume. Mechanical. Stop losses triggering automatically, not real sellers entering with conviction. The volume bar on the sweep candle should be noticeably lower than the volume bars that preceded the decline. If the break below happens on the largest volume bar in recent sessions, be extremely cautious. That is not a mechanical sweep. That is genuine selling pressure. Participants are entering short with real conviction. That kind of break has a much higher probability of continuing lower rather than reversing. The filter is simple. Low volume on the break equals high probability sweep. High volume on the break equals caution. Wait for more confirmation before considering an entry. Step 3. Watch for the reclaim. After the sweep, price needs to close back above the swept level. This is non-negotiable. A close back above the swept swing low tells you the break was not accepted. The market went below that level to collect liquidity and found no continuation. The sellers who pushed price below the low were stop orders, not real participants. Once those stops were collected, there was nothing left to drive price lower. And the reclaim tells you that buyers stepped in immediately after the collection was complete. How fast price reclaims the level matters. A reclaim within 1 to 3 candles is strong. A reclaim that takes 5, 6, 7 candles suggests indecision and weakens the setup. The faster the reclaim, the more confident the reversal signal. Step 4. Identify the entry zone. Once price has reclaimed the swept level, you have 2 possible entry zones. The first is the order block, the consolidation zone immediately before the sweep candle launched. This is where buying pressure originated before the sweep happened. When price pulls back into this zone after the reclaim, it is returning to the area where institutional orders are likely still partially unfilled. The second entry zone is the fair value gap. During the sweep and reclaim sequence, Price often moves so fast that it skips through price levels without trading there. That gap left behind is the fair value gap. Price tends to return to fill that gap before continuing in the reversal direction. If both the order block and the fair value gap align at the same price level, that is your highest quality entry zone. Mark the zone. Wait for price to pull back into it. Do not chase price above the zone. Do not enter before price reaches the zone. The zone is where the trade exists. Entering anywhere else is a different trade with a different probability profile. Step 5. Wait for the trigger candle inside the zone. Price has pulled back into your entry zone. Now you need a trigger. Not just price being in the zone. A specific candle that tells you the pullback is ending and the reversal is resuming. You are looking for one of two trigger types. A bullish engulfing candle that closes above the midpoint of the previous candle inside the zone, or a candle with a long lower wick that closes back above the zone's lower boundary. Either of these inside your entry zone is your entry signal. You enter on the close of the trigger candle, not before the close. The close is what confirms the signal. An open candle can look like a trigger and then close as the opposite. Always wait for the close. Step 6. Place your stop loss. Your stop loss goes below the sweep low, not below the entry zone, not below the order block, below the sweep low itself. The sweep low is the lowest point of the entire sweep candle wick. That is the point at which the setup is completely invalidated. If price returns to the sweep low and breaks below it again with a candle close, the sweep was not a sweep. It was the beginning of a genuine breakdown. And if that happens, you want to be out of the trade before it continues lower. Some traders prefer a tighter stop below the order block or below the trigger candle's low. That is valid if the sweep low is very far from your entry zone and the risk-reward becomes unfavorable. But the absolute hard invalidation point is always the sweep low. Never place a stop above it thinking price won't come back. If the setup is valid, price will not break the sweep low again. If it does, exit. Step 7. Set your target. Your target is the next significant liquidity pool above. After a bullish sweep and reversal, price is heading toward the resting orders above. Those resting orders sit at the most obvious swing highs, the previous highs that every trader can see, round numbers above current price, and the nearest session high or day high. Mark the nearest obvious target above. Check the path to that target on the volume profile if you have it. If the path goes through a major high volume node, your target may stall there. If the path goes through low volume nodes, expect price to reach your target quickly. Your minimum risk reward should be 2 to 1. If the distance from your entry to your stop is 20 points, your target should be at least 40 points away. If the nearest target does not give you 2 to 1, either the entry zone is not in the right place or the sweep low was too far from the nearest liquidity above. In that case, reduce your position size or skip the trade entirely. Putting it all together, the complete 7-step sequence. Step 1. Mark the swing low before the sweep happens. Step 2. Confirm the sweep on low volume. Step 3. Watch for the reclaim within 1 to 3 candles. Step 4. Identify the order block and fair value gap as your entry zone. Step 5. Wait for the trigger candle inside the zone. Step 6. Stop below the sweep low. Step 7. Target the next liquidity pool above with minimum 2 to 1 risk reward. 7 steps. Every single liquidity sweep trade follows this sequence. Skip a step, and you are not trading a liquidity sweep setup. You are gambling on a move that looks like one. Now let me show you what causes this setup to fail so you know when to step away. The setup fails when the reclaim takes too long. If price is below the swept level for more than 5 candles, the selling has found acceptance below that level. Exit or do not enter. The setup fails when volume on the sweep is too high. Genuine conviction selling cannot be overcome by a simple reversal candle. Wait for a full restructuring of the chart before looking for entries. The setup fails when the entry zone gets broken. If price retraces into your order block and slices through the bottom of it without any trigger candle forming, the zone has failed. What was support is now resistance. Exit immediately and reassess. The setup fails when the trigger candle closes weakly. A candle that barely closes above its midpoint inside the zone is not a confident trigger. Wait for a cleaner signal or skip the trade. Here's the mindset shift that makes this entire framework actually work in real time. Stop looking for the perfect sweep. Start executing the checklist. Traders who wait for the perfect setup, the most obvious sweep, the cleanest reclaim, the most beautiful trigger, miss most of their trades while watching them unfold without them. Traders who execute the checklist consistently, even on setups that are not textbook perfect but meet all 7 criteria, are the ones who build a track record over hundreds of trades. The checklist is the edge, not the individual trade. 7 steps, every time. Without exception, drop a comment. Which step in this sequence is hardest for you to execute in real time? The entry zone identification, the trigger candle, or placing the stop below the sweep low? I read every single one. I'll see you in the next video. Stay disciplined.